What's going on? Y'all traded London session? Let's see. Especially gold. Like anybody took the gold sales? Yeah, it was just like gold sales and equities pulling back. Yeah, I don't know what's up with my internet though. Hopefully it doesn't. All right, it's good now. Yeah, like that. It's good patience. Like having a good week. Yeah, like just don't force anything. You know, if you already had a good week, like it's good to have something extra. You know, like for this event, if you could get something extra, take advantage of it. But if you don't have to, like, don't even bother. You know, like next week should be a lot better. But it's Friday. You know, like that's when it's going to be important at the end of the week because of jobless claim. I mean, NFP data. So I don't want you to. Yeah, definitely don't ruin it if we don't have like a clear print. But if we do get something clear, it should be pretty easy. You know, so you should definitely be able to take advantage of that. But yeah, like the gold sales pretty much the only thing. Yeah, like you could just see it's like at 9 p.m. on the dot. It's just like as soon as it broke structure, just pushed lower. Yeah, it's like very hard to. I, I mean, if you guys have just been, I know most of you are just like focusing on it. It's like one. I think it was like one day this week where gold didn't give us a good setup. Like it did nothing until like London session at 3 p.m. 3 a.m. But other than that, like 9 p.m. has been on the money. Let's let a few more people join, and then we get it started, guys. What pairs y'all going to be trading for CPI? Do you already know what pairs y'all going to be looking for to trade? Yeah, I don't trust the US 30 neither. The buys. When you took the buys, USD JPY. I mean, it pushed higher. It did push higher though. Like as expected, like the stronger dollar. Yeah, I'm finally in prop. I'm still holding AUD JPY. Still in profits. Finally in prop. Like so, you guys should know that was from the AUD inflation. Still holding the buys, you know, and finally got some profits out of it. So just to give you guys an example of how long it usually takes, you draw down this whole time. But that's really the only trade I took this week was the AUD JPY. You holding gold? Most likely, it's most likely because I believe, like, do we have Swiss data? I believe we had Swiss GDP earlier. Let me just check one sec. I believe that's why. Let me see. No, that was yesterday. All right, guys, let's get started. So today, the main focus is going to be US PCE data. All right. The reason why this data print is extremely important is because it's going to impact inflation. This is the preferred measure of inflation for the Federal Reserve. Let me start this recording.
Recording
All
in
right, repeat.
progress.
What's going on, guys? So today we're going to focus on US PCE index. All right. So this is the preferred measure of inflation for the Federal Reserve. This is inflation data. Okay, so this is going to impact monetary policy for the next meeting that's going to happen in September, right? Later September, in the end of the month. If we get higher inflation, that is going to increase the odds of a pause, right? That's what it's supposed to do. If we get lower inflation, that would increase the odds of a cut. So now we have to understand, right? Just to give you guys an idea, if we get higher inflation, typically what that would do is strengthen the dollar, but that would also weaken the stock market like NASDAQ, US 30, S&P. If we get a lower inflation print, we will see the dollar get weaker. That would typically strengthen equities, okay? Because if we get higher inflation, that's going to be more hawkish. That would lead to more members voting for a pause. They're not going to hike rates, but if they was back in the days, probably a few years ago, a higher print would lead more to a hike. But this time around is only leading towards a pause in interest rates. If they do that, this is why we get those directions, right? So if we get a lower print, that would increase the odds of a cut. So that's why cutting rates is good for the stock market, right? So that's why we anticipate those directions just from that type of print alone, okay? But now we got to dig a little deeper. So what is the things that we heard last time from Jerome Powell is that he's expecting higher inflation, and it's expected, right? But he's expecting it to be short-lived. That's the reason why from the Jackson hole, we had a dovish reaction. So if we do get a higher print today, it may not give us that hawkish reaction because it's expected. Okay. The fact that is expected, it's not a surprise, right? So in order for us to be a surprise with a higher print, the numbers has to at least be above the high expectations, right? So if we're looking at core PCE year to year, in order for us to be get a little shock, like a 2.9 is as expected. A 3% probably won't even budge. But if we could get a 3.1, that would be a shock. That would be something that would be tradable from a higher print because that is a surprise to them, okay? If we just get green across the board and no surprise, like we're not beating the high expectation number, we will probably get a hawkish reaction where initially from the data, we probably could get a stronger dollar and weaker equities, but then the moves could probably recover because it's not going to change expectations of September. The best opportunity from this print would be if we do get a miss across the board. Even it don't like to me today, it don't even have to be a surprise, just enough to show that inflation is still lowering because this goes against what they was expecting, right? They're expecting higher inflation. So if this number is coming actually lower, that would lead to the best tradable opportunity. Okay. That would be a no-brainer. That would be dollar weakness, equity upside. It would be a no-brainer. Okay, so no-brainer trades are the best option. If we get a surprise to the downside where we see that the core PCE year to year is below a 2.9, if it hits a 2.8, 2.5, that would be a no-brainer. Weakness of the dollar, that would probably lead to intraday trades. That would probably lead to a swing trade, okay? Because that would just increase the odds of a cut, right? Most definitely, even if we're heading towards next week NFP data. Okay, just to give you guys that idea. So that's what we're going to pay attention to. And then afterwards, we have inflation expectations at 10. So it'll be pretty good if inflation expectations could follow PCE today. But PCE is just going to be the main focus. All right. So just remember, if we get a higher print, it could give us a hawkish reaction, stronger dollar, weaker equities. But if it's not a surprise, it would probably not be that much of a move, right? Because now when we're looking at expectations, right? So this is just the core PCE monthly. We want an outlier. We want to see, like, because these are all the banks. This is just their expectations of where they think this number is going to go. So in order for us to get the best move possible, we need to see like a higher print would be at a 0.5, because that would be the surprise print, right? If we want something lower, we need that at the negatives below that 0%, right? This is for core monthly, right? So that's how you could take advantage of the best opportunities. For this one, you want a 3.2%, right? Because this is an outlier. Even a 3.1 would be good, right? A 3.1 for like, that would be amazing, right? If we could get a 3.1, that would be the outlier. Do I think inflation is going to go below 2%? Most definitely not. But if we could get around a 2.6, 2.7, right, that would be a really good print for lower inflation. Okay, because it's going to be below the forecast with the expectation. That yellow dot, that 2.8, we need that at least lower than that. But we're definitely not going to be at no that 2% zone. Now this is just the index, right? PCE headline inflation is what the central banks can't control. Okay, so monthly a 0.4, that would be an outlier. If we could get it below a 0.1, I don't think that's going to happen. We probably won't hit that 0%, but if we could hit a 0.2 or 0.1, that would be great. And then now for the headline year to year, you can see like they're expecting pretty much around a 2.6. If we could get a 2.8, or if we could get anything lower than a 2.5, that would be ideal for opportunities. Okay, so that's how we will look at this data. All right, gold, yeah, gold will follow. Gold would do the opposite of the dollar and the yields, right? So just remember that it's inflation if you guys are trading gold, right? So if inflation, typically what happens, right? If inflation goes out higher than expected, because gold is impacted, right? It is impacted by inflation. So what gold could do, right? It could spike higher, and then we could possibly see gold actually push lower as the dollar and the yields gain strength. Then you could see gold push lower. So just always try to be anticipating that possible pullback. Okay. Same thing for a reversal, right? If inflation is lower, we can see gold spike lower a bit, and then we can see gold push up higher. All right. Usually what's going to happen today, if we do get a higher print, right? Gold will probably not react. Like, it's a possibility because we will get dollar strength, and it may not increase the odds of a pulse. Like this probably, because it's expected, right? Because you can now use gold as an indicator. If we see that the dollar and the yields is rapidly rising and gold is not breaking this support, right? I would probably look for the possibility of the markets turning dovish again. Make sense, guys? Yeah, put a one in, guys, in the group if that makes sense. Because I know most of you trade gold. So you could use gold as an indicator, okay, for this event. Because if gold is not reacting towards the opposite of the dollar and the yields, you could use that as an indicator that the markets is not going to follow that hawkish reaction. It's a possibility. All right. And then usually after 9:30, pretty much we'll get the real move of the day. Pretty much we'll probably see how the markets really feel. Right. Because sometimes you'll be like, oh, how come the dollar and the yields is pushing up? Right. And then gold is still in the range. Right. That could be an indicator that we'll see gold probably do something like this. And then we'll probably see gold just push higher. And then we'll see the dollar pushing lower and equities pushing higher. And then everybody's like, what the hell is going on? Why isn't the markets following the data? Right. So just use the markets as an indicator. That's why, yeah, like the best opportunity would probably be if we get a lower print, because it'd be less of a guessing game. You get what I'm saying? So you want to have an edge. A higher print, we got to use our big brains. And you could either take advantage of the scalp of a higher print, but if we get a lower print, that would probably increase the odds. But obviously, at the end of the day, the markets could do what it wants. All right. But in order for us to just have a strict direction for the dollar, right, a lower print would just help. It just makes our lives a lot easier. Okay. A higher print, we then are going to have to wait for NFP and then see what type of data NFP gives us. And then we could probably get an edge. Okay. So that's why I prefer, hopefully, we could get a lower print when it comes to this. All right. So that's why, like, you could use gold as an indicator, but gold should be doing the opposite of the dollar and the yields. All right. If you guys are on Instagram, you probably can't really see the whole screen. You're just going to my YouTube so you can at least get the full picture. All right. And like and subscribe if you choose to, if you like this type of information, or you just want me to do videos on how I made $5,000. And then unless you like those type of videos instead. Right. But hopefully this is helpful. All right. So CAD GDP, I'm not going to really focus, but it should be very simple. I probably wouldn't focus on that, Kevin, to tell you the truth. Unless it's like something drastic, you know, if you get like a very big, unless you trade CAD, obviously, I would say probably a lower print would be the best. You know, it would be the best lower print. You know, if you get a lower print, if you want to CAD trade, like I wouldn't even trade CAD JPY, probably like AUD CAD. You know, look for buys for that would probably be a good one, or GBP CAD. But leave the yen alone because the yen is going to be impacted by the US data. Okay. Yeah, like USD CAD also. Yeah, like USD CAD could be a good one, but you want it to be inverse, right? So that's just the best thing. You want to see the print is like the data is inverse each other, so you can really have an edge. It's just it would depend if you're quick, you know, and usually we're not that quick. So it's going to be a tough one trying to trade USD CAD, but it's going to most likely react to the dollar anyway. Like my opinion, it's going to react to the dollar anyway. So yeah, like I would probably just trade the CAD alone, like just try like pound CAD, or like if we get weaker data, I like the idea of probably like AUD CAD if we get weaker CAD data, right? Take AUD CAD buys or something. Or pound CAD, you could get some really good pips out of that. So yeah, definitely focus on that. Like if you guys like, I know there's some people that only trade GJ. So if you trade GJ, the yen is going to do the opposite of the dollar and the yields. So if we get stronger dollar, stronger yields, the yen would get weaker. So if you're looking at GJ, that will push GJ higher. Okay. Then vice versa. If we get weaker dollar, weaker yields, that would strengthen the yen, and that will push like a pair like GJ lower. So for you guys that focus on those pairs, all right. Yeah, I usually like USD JPY, but it's been a hit or miss. I think equities would probably be the best bet today if we get a clear print. You know, I think either direction should be okay when it comes to equities. I would like the idea of a stronger dollar just so that we could have the dollar continue to push higher and then look for sells later on. Most likely look for sells next week. I like the idea of that, you know, because it would give us better opportunities for, you know, swing trades to the downside of a weaker dollar would be the best bet. That's what I'm hoping for. Just if we could get dollar to come at least close to 100 again and then start looking for sales at that point, I think that would be the best bet. You know, and again, like don't take a trade until after the data comes out. All right. So you could have a clear picture of what the data is going to do and then wait for breaks of structure. Don't just guess a direction, right? You want the data to be clear and then you want the markets to actually follow, right? To follow the data. So we could have certainty that the markets actually care about the data and is moving in its direction. All right. So it's just no guessing, you know, like if you have to guess, then just don't take a trade. All right. No FOMO. Opportunities is going to be there next week. All right. So dollar, we already broke above structure. So with a stronger print, right, this is the direction we want to see the markets go. Right. So it's just going to be color coordinated when the data comes out. So again, guys, I'm not going to go live with you guys. I will go live with my private group. If you guys are interested, link is in the bio if you want to join, but you're going to have 10 minutes. So just make sure if you guys do that now. All right. But I just want to give you guys analysis. So if you're trading it on your own, at least you know what to expect. All right. So these are the directions that we are going to expect the markets to go. And no, I don't trade everything, but you guys, everybody trades a different pair. So at least for the pair that you're looking for, that's the area of structure you want to see price break. The yields is in the bottom left. It's just a US 10Y. Just put that in your trading view chart, because the yields just gives you an indicator, right, of what just pretty much of rate expectations, which direction, how the markets is expecting rates to go. All right. So like, all right. So guys, any questions, or if it makes sense, just put a 1. Yeah, if it comes out mixed, right? If we see that data comes out as expected, then it's just no tradable opportunity. Like you could probably still wait until 10 and for inflation expectations, but this is going to be the focus. Like if it comes out mixed, we see green and red together, don't just leave the markets alone. All right. Then that will most likely focus on news headlines afterwards to see if that could give us an edge. If it comes out mixed, just leave it, right? If it's as expected, right, leave it alone. It's a possibility like headline could probably stay the same. And if we see like headline year to year and monthly remain the same, and then we see core monthly remain the same, but core yearly is lower, it might give us a dovish reaction, right? So if like 2 or 3 of them remain the same, and if the other print gives us green or red, most likely the markets is going to follow that green or red. If it's green, I don't expect the markets to really care as much, okay? Because I don't expect the market, unless everything, in order for me to say a hawk the green arrows to actually go in this direction, I would think we need a massive surprise to the upside in order for us to take advantage of that, okay? So I'm gonna do it in yellow. I do it in yellow. What could happen is dollar could spike up, gain strength, and then we could possibly see it recover afterwards and push lower. Like what it did yesterday, where I told you guys in a private group that we had strong GDP, but it's not going to change up expectations. So the fact that the market should be bullish, the dollar should be bullish, but if it breaks support and push bearish, there's a more higher chance that it would be more volume pushing to the downside. And that would be the opportunity, even though that is against the dollar, right? Because it's not giving us, it's showing that the market is trying to force that rate cut expectation. All right. So if we get a higher print, I personally don't like it. But if it's a surprise, then yeah, take advantage of it. Okay. But if it's just a higher print, I would probably just be a little, if you want to take the scalp, take it. But a higher print, I would probably just be more patient and wait for the reversals. All right. All right, I read you guys' questions. All right, 1. All right, guys, how do you read data? It's all, I do it in a private group. I show everything there. That's how you're going to learn. And then, yeah, just give it like a month and you should be all right. Then you could go. But all right, guys, later. Thanks for joining. Hopefully this was helpful.